value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, a very bumpy ride in the markets over the last few days. Tesla losing over 20%. There was a big bite taken out of Apple. Is this telling us something about the shape of the markets, especially the high-tech stocks?
Yes, and I think so. I mean, it is definitely a warning. You know, we have had, in my world, I work with, of course, cycles, and you have, statistics that tell you when the cycles are due and that sort of thing based on, the historical norms. And what we have had is we've had an extended, as, it goes without even saying, but we've had an extended move out of the March low, and that cycle is very stretched at this point. It's pushing the end of the normal norms, if you will, and so it's long. But what we've seen a couple of times is we've seen that intermediate term cycle try to bite, and it wouldn't, and then it's tried to bite, and it wouldn't. And what we're seeing now as we move toward the end of the timing band, if you will, for this cycle, we're seeing it trying to bite again. And so, yes, I think that what we're seeing with Apple and Tesla and the market in general, even Facebook and a lot of other asset classes, I've been saying that I thought that pretty much everything was going to set up to peak together here with this intermediate term top, and I think that's what we're seeing. Absolutely. What comes of this, cycles, they peak in a clustering, and so could this be more? Absolutely. But we have to get past the first hurdle before we can judge the second. And at minimum, I think we have an intermediate term top in the making. Yes.
September traditionally has been a stormy time in the market, so are we going to see squalls or are we going to see hurricanes?
Well, the potential, that's what I was saying, the potential is therefore to be a higher degree turn. And as stretched as it is, I definitely think that's on the table. I'm not avoiding answering the question. I'm merely saying, yes, that potential is there. I mean, this could potentially even be of cycle degree to top the advance out of the March low, but we don't know that yet. I do know it's an intermediate degree top, and I need to see how it sets up in conjunction with that top. Like I said, get past the first hurdle before we can get to the second one. But to try to answer the question as directly as possible is, yes, it is an opportunity. Yes, that is possible. And, as stretched as this thing is, we could see a snapback and things fall in place real quickly, kind of like we did with the February top. And so knowing that the cycles are as extended as they are, absolutely. The risk here is, with this intermediate term top, is probably higher than people realize.
Now, Tim, you're the one who told me about an interesting phenomena, the 18-year-old who was making a minimum wage job at Lowe's, quitting his job because he was making so much money day trading. Are these people about to get a rude awakening, perhaps a slap on the wrist, or maybe they're going to be flogged? What's going to happen to them with a market like this?
Eventually they're going to be flogged. That's the thing, that when everybody's a genius when something's just moving in a straight line. And everybody's a genius when it just continues and continues and continues, and it seems like that any kind of statistical-based analysis goes out the window because you've extorted the norms, if you will. But yes, things, the reality will set back in. Like I said, the cycles are extended, and absolutely. I mean, I think what started in February will continue. The question is, as we moved into the March low, before the low was even made, I made the comments. I said, the question now is going to be, how well can it be contained? And, we've talked about manipulation, and that's not conspiracy. I mean, obviously they come out and do the programs to try to hold the market. And so that truly is the juncture we're at now. Okay, they did the things they did. We had the cycle lows from a cyclical perspective. And now we sit at this crossroads where we're at this intermediate and the potential for these higher degree cycle tops. And the question is, well, how effective is it going to be in conning the market? And it's literally a con job of the market in many respects that they have. We've talked about that before, that they have more power than they really do. It's kind of an illusion. And if you believe the illusion, then reality becomes, or the perception becomes reality, sort of thing. And so that's kind of where we're at. How well can it be contained? Will it linger here with the setup into the election or not? And that's what I was saying. We got to get past the first hurdle before we can judge the second one. And on that note, talking about the Fed's powers, if I could, what you see is like Powell's statement. We may have talked about that in the last interview a little bit, I'm not sure, but he's talked about how the focus was going to be shifted toward employment and letting inflation run a little higher and that sort of thing, and keeping rates down. Well, all of that is like I said, it's smoke and mirrors, which if we were in their shoes, we'd probably do the same thing. But we've had this little bounce back in the economy where the jobs numbers have come up, and so they set the expectation. This is what I mean by the perception of power in many respects, is that they set the expectation with that statement that to take credit for this little bounce back that we've seen with the jobs numbers. But if you look at the jobs numbers and look at the growth rate and some of the statistics surrounding that, the hard data, what you see is we're still below the previous lows of all levels going back to the Great Depression. So you got to bounce out of a 100-foot hole, if you will. So okay, so it bounced a little bit. It's still below all previous levels as far as the growth rate. And so that's, I guess I made the point, but that's the example that they set. And they're saying they're going to keep rates low. Well, yeah, until the market checkmates them and tells them they can raise them. That's right. But they set that expectation, and they tell you that even it's an expectation based policy, I guess is the words. I don't remember exactly, but they use the word that's expectation based, and that's exactly right.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the outlook for the U.S. dollar?
Well, the dollar has made a longer-term 4-year cycle top. We talked about the low back in 2018. I remember specifically you asked me what was the big surprises going to be for the new year, and I said, well, the 4-year low in the dollar. Well, we now have the 4-year top in the dollar. We had that confirmed. We've been suspicious of it. And in the shorter term, we're at an intermediate term low. So the dollar should bounce out of that intermediate term low, but that bounce should be counter trend. And overall, I think the dollar moves lower in conjunction with that 4-year cycle top. Now, that said, I am not in the camp because the evidence doesn't support it. Looking at the statistical stuff and looking at, the dollar from other angles like the trade-weighted dollar and some other things that I've covered, I'm not in the camp that this is the end of the dollar sort of thing. Not at all. It's reserve currency of the world, and I don't see that changing anytime soon. Yes, I think the dollar is overall under pressure, but it's within the context of the 4-year cycle top with a counter-trend rally here that should be taking hold.
Do you think the government in the U.S. wants a lower valued dollar or a higher valued dollar?
Absolutely, they want a lower value dollar, and that's the thing that we're seeing. It depends on when I said when I said other measures or whatever the words were used to looking at the dollar. When you look at the DYX, it's more easily manipulated than say the trade weighted dollar, which is a compilation of the dollar based on I forget how many different indexes, or how many different currencies. It's something that's available on the Fed site, and you look at it there, and you see a completely different picture. And what you see there is it does move, it does ebb and flow to the same 4-year cycle, but it's consistently moving higher and higher and higher and higher and higher. It always goes up. And so what I'm saying is that what you see with the DYX is not necessarily what's really going on with the dollar. So, yes, looking at the DYX, 4-year cycle top, weaker overall prices into the low, but looking at the trade-weighted dollar, I don't see the dollar. I mean, there's no evidence. The evidence is not there. The structure is not there cyclically to say that it's the demise of the dollar. So I'm saying I think we go into a normal correction overall with that 4-year cycle top. But the answer to the question is yes, they want a lower dollar, and I think the reason is to try to inflation. They're trying to generate inflation, desperately trying to generate a reinflation. And so I think that's the point behind wanting a lower dollar.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, we're at the end of the so-called driving season, which usually drives oil prices higher. What do you see happening with crude?
Well, intermediate term top, and I've said all along that the rally out of the lows back in, I think they bottomed in March as well. Maybe it was April. I'm not looking at the chart, but I've said that I think that is a counter trend advance. And when I say counter trend, I realize that crude oil went negative briefly, and so it's hard to call that completely counter trend because that would imply that you're going to go negative again. But what I'm saying is I think we revisit those lows that we saw. Actually, it was in April that crude oil bottomed. I do think we revisit those lows, and so my outlook has been that everything has been in a counter trend bounce here coming out of those March, April lows, and I think that's the same for commodities and crude oil. Just like equities, if you look at a chart, crude oil has basically been sideways for several months, and it hasn't wanted to give way to those intermediate term cycle tendencies, if you will, or the fact that the cycle top was due. That is now happening, and it's the expectation is that it peaked with equities, which we're seeing, and other asset classes, which we're seeing. Thus far, we still have an intermediate term top in gold, and we're seeing an intermediate term top in like Bitcoin and pretty much all asset classes. So that is on track. While on the one hand, yes, this advance is held on in pretty much all asset classes, and the other, we have those cyclical forces trying to take hold, which we are now seeing.
What's the picture for gold?
I've said, I've openly acknowledged that the advance into the 9-year cycle top has gone further than anticipated. But when you stand back and look at it, I still say that this is not a long-term breakout in gold, that it was an extended move into a 9-year cycle top. And I think that once the real setup, across the board is in place, that all asset classes come down together, including gold.
Would that give people an opportunity to buy at a much lower price?
Oh, I think so. Once we get into the next 9-year cycle low, of course, absolutely. And so it's not that, you're perpetually bearish on gold. I don't mean to paint that picture. But when you see something that has stretched the norm and stretched the norm and stretched the norm and doesn't make sense and stretched the norm and, it's an extreme abnormality, then it is what it is and you can't negate that. And that's why I'm saying, that I think we're pressing into a 9-year cycle top. So the angle of my view there is not to be so pessimistic with gold. It's like, Jesus, this thing is gone on and on and on, and you have all these historical measures and statistics and so forth, and I know that we're pressing into a 9-year top, and that it is an abnormality. And so that's why I've had the views that I had. But yes, I'm rambling now. But yes, I do think we're flirting with the 9-year top. We have the opportunity for that 9-year top once again. And I do think, like I said, once everything is set up, that it goes down together. And of course, that would be a much better buying opportunity.
Tim, do you have any explanation for the strength in copper right now, considering I don't know if a lot of construction is taking place?
I don't, other than, the explanation I can give you is that copper, and people don't like to hear this, but all of the industrial metals move pretty much to the same 9-year cycle, the same cyclical rhythm, the same, there's an annual cycle, there's an intermediate term cycle. They all move to the same cyclical rhythm as gold. Tin and zinc and nickel and all of them, if you look at it. And so we're seeing the same sort of move there, but you're right. There's no explanation based on the economy for copper to be doing what it's doing. And so the way I look at it is that it is a cyclical, technical-based move, but I can't exactly remember what it was I was looking at with the statistics, but there was something about copper that was not confirming this 9-year cycle that was unique to this advance, which was a warning. I know that none of the other industrial metals are confirming some of the structure with this 9-year cycle advance, and that is a warning that the strength that we're seeing in gold is the abnormality that I've been saying that it is. And so the warning signs are there, and like I said, I stick to it, and I think copper will follow suit with gold and everything else.
Tim, how do your subscriptions do when there are so-called good times in the market versus bad? Do people look for advice to improve things, or do they get desperate for advice when things are going sideways?
People are always, they listen the least when they should listen the most, if that makes sense. That's always the case. And, I talk to, some of the other people who's been in the business for a long time. Peter Elides was a mentor of mine, as was Robert Prechter. And, I think that's just a natural part of the cycle as well. When things seem well, people don't need the advice. It's kind of like what you ask about the young traders. When things are going good, everybody's a genius. It's when things are not as they appear and you're in these extreme abnormalities and that sort of thing, where the analysis is, I guess carries the most weight, but then that's the time when people listen the least. So the answer to the question is that when times are good, people don't think they need the advice. When times are bad, they flock looking for answers.
And Tim, before we go, your new newsletter is coming out. Any highlights we should be looking for?
Yes, anyone interested in the analysis and the things that we're talking about here, I have some pretty good analysis, I think, evidence, if you will, hardcore evidence that is showing the disconnect between the economy and the stock market. Back in 2000, last year, we pressed into the top. Remember, they pointed toward all the bombardment of the news about how great the economy was and the jobs numbers and so on and so forth, and say, see, look at the stock market. This is evidence of the economy. And so in this letter, because of the latest job numbers and so forth, I've gone back and looked at some of the economic data, and it's not just job numbers. That's not even really a minor piece of it, but I've looked at some of the harder core evidence to prove that this economy is not, or the stock market is not reflective of the economy, and just showing that it's not as we're being told, and then of course looking at the stock market as the cyclical and structural setup is trying to fall in place.
Tim, thank you so much for chatting with us.
Yes, sir. Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.